Peeps,
Start.
welcome to reproductive class. So today, I'm gonna learn.
What are you talking about, bro? How much fucking crack do you do before you come here,
I
man?
don't want to know too much to make.
Alright, so, as always, disclosure, which gets ignored every week, but it's still there. There we go.
So, done to us. Okay, for this mate, feel problem. Okay, we'll just stick the page.
Alright, so,
What's 21 to him? He's got more money. Okay, the same.
right, so week 6, we're going to be covering tools. Tools is probably one of the most interesting things that we'll do throughout this entire course. We're going to be covering 2 sections. We're going to be covering Fibonacci and the Andrews Pitchfork series. You might notice that Garn is also up there as well, but it has a line through it. We will not be covering it only because when I first started AGI and invited Mohammed, I wanted 2 opinions on everything. As Mohammed does not use Garn or has never worked with Garn, I don't want to give a one-side story. If you want to learn it, we can potentially tee up something at a later date. Just come up to me after class and we'll work something out. So let's get started. So first we're going to go with the Fibonacci tools, and Mohammed will be taking that.
Alright, so we'll start with Fib tools. Now, I'm going to tell you from now, this is a bit complicated to understand, okay? Also, I'm not going to be covering Fib wedges, okay, Fib spirals, Fib ellipses, and Fib channels, okay? Because these things, I don't believe they work properly. Okay, I've used them many times. Okay, they don't work with me. At the same time, there's not much information about it, so I don't want to actually teach you guys something that's wrong or that's dishonest. So the only thing that is, like I always use to a generic basis, is the extension tool and the retracement tool. All right, so we get started. Now, what's Fibonacci retracement? Now, Fibonacci, who knows what Fibonacci is? Does anyone know what it is? You know what it is?
Just a sequence of numbers.
Exactly right. So it's just a sequence of numbers, okay, that defines patterns, okay? So it defines patterns. So it could be like 1, 3, 5, 9, I don't know, okay? I generally don't know off the top of my head, but it's set to define patterns. Now, I don't know the name of the person. I think, was it Andrew? No, that's pitchfork theory. All right, so for the Fibonacci tool, there was a man who came up with this idea where the marker is described in patterns. Okay, that the marker moves in waves. And we see that clearly. We could see the oscillations. We see waves. Sorry? No, Elliot came up with an Elliott wave theory, which is a bit separate to Fibonacci. I'll explain later on how it tees up with it. So, yeah, so, did you want to dim the lights a bit or just keep it like that? You guys can see that? It's all fine? Yeah. All right, sweet. All right, so, yeah, so now with the Fibonacci retracement, okay, it's not... Hey, Lucas.
Hello.
How you been, man?
Hey,
Class finished, we started online today. All right, so now, does anyone know what the Fibonacci retracement is? No? So you guys have no idea? Okay. Now the word retracement, who can remember what the word retracement meant? Explained that in week 2. Come on guys, who's listening? Exactly, pullback. Okay, retracement just means pullback. Okay, it just means that the market moved in a direction, we have a downtrend, okay, and it started to retrace, to pull back. Okay. Now Fibonacci is defined simply in one way. It's a trend trading strategy. Okay, so if you guys want to write this down anyway, it's a trend trading strategy. Okay. Now, does this work? Yes. Does it work all the time? No. Okay, as per standard in the market, nothing works all the time. Now, why is this so effective? Because it can give you the best risk to reward ratio in terms of entry, and it can show you areas where possible reversals will occur, in a sense where you're looking at pullbacks, okay? So you could actually see and determine where the end of a pullback will be, okay? Now, it's a bunch of numbers, okay? So we've got these numbers here. So this is what the Fibonacci tool looks like, okay? This isn't drawn accurately, by the way, okay? So I just chucked it on. Okay, it's this region where you have the dark shade of purple, gray, blue, aqua, green, yellow, and red, okay? Now, these regions, okay, they all signify a certain pattern. Now, what I mean by pattern, it means this is where a reversal could occur, okay? So the way this works is the Fibonacci theory tries to determine areas of reversals by looking at patterns in the market. Does that make sense? That's the simplest way to put it. Now, how do we draw these Fibonacci retracements? I'll get to that in the next slide. But for now, what I want you guys to remember is this, okay? The best levels of reversals, also these levels, by the way, they act as support resistance levels, okay? So if you guys want to note, okay? The best reversals the best numbers that where reversals occur and where we look at entering is 0.786%, the 0.618%. Nothing else. Okay? I'm not saying that it doesn't reverse off every level, okay? I'll show you next what I mean by reversal. Just note that the best reversal I personally look at for the best risk-reward ratio in terms of entry is the 0.618% and the 0.786%, okay? The 0.05, the 0.382, and the 0.236%, reversals do occur on that, but it gives you a bad risk-reward ratio, okay? And I'm going to explain how. Are there any questions? No? Jesus, you good? All right, sweet. All right, next slide, please. All right, so examining fibs through TradingView. I'll go on TradingView now. Yeah. Are you going to eat now? Really?
Yeah.
As always. Where's Bonnie? Where's Bonnie? The lovely Bonnie here today. Okay, so everyone say thank you to Bonnie. She got us some food, so we're going to starve to death for the next 3 hours. So, shout out, Bonnie. So, shout out, Bonnie. Yeah, sweet. All right, so we'll get started with now Fibonacci. All right.
No, I didn't bring my tail sandwich.
Now, wait, can I use? I can use this one, yeah. You don't have anything set up, but you need.
No.
Oh,
Just
sweet.
make it the single one.
Yeah. Okay, sweet. Now, just one thing. This works on every time frame. Okay, but as per usual, as I always say, the higher the time frame is, the better, because there's less noise. Okay. So you only want to use this, by the way, with trends. You don't want to use this with support resistance levels. Okay. I'm not saying it doesn't work with it. I'm saying that there is no actual established way to determine how it works with support and resistance. Example, when it's consolidating. Okay. So this does not work best when it's consolidating. It only works best in a trending market. Does that make sense? All right. So let's assume. Let me look for a nice decent downtrend now. Okay, I'm gonna go to a different pair. Give me a pair, guys. What do you guys want? Scream something on top of your head. Not Palladium, Bonnie. I'm sorry? New Zealand dollar? AUD USD. The Aussie, the kangaroo dollar, that's what I call it. Alright, so here we go. Dude, really? Give me another pair. Give me something else. No, that's all right, sorry. Give me something else. Do the euro. Please tell me the euro is halal. Yeah, the euro is halal. There's nothing on there drawn. We're good. I swear we're good. All right. But what difference is all consolidating? All right, let me find the descending some downtrend now. Let me see what's going on here.
That's a decent downtrend, yeah.
No, I need to pull back. I need a nice thing. You know what? I'm gonna take this up to the 2-hour time frame. Yeah, this is the hardest thing about trading is spotting trends. A decent trend as well. Yeah, okay, that will work. Alright, so... No, that's not enough, not many touches. Let's see what's done here. No, not too noisy. Well, this is the thing with this Fibonacci tool. It works very accurately when you're in the right trend. Okay, if you're in a shit trend, it's gonna work crap.
No, you didn't do it from before.
It just like sends a dick pic or something. It just kind of comes up. All right. Yeah, don't do that, by the way, man. That's fucking weird. I'll just go to a different pair, man. This is all consolidating bullshit for the euro. Euro CAD. Let's see what's happening now. Oh, perfect. Here's okay. Here we go. Finally, we had something visible here for us. Okay, I'm not gonna draw this as scale because I cannot be bothered. But here we go. Now, this says this is consolidating. Great, it's a downtrend. Okay, you can see the slant of the gradient. It's down, right? Now, the way Fibonacci works is very simple. On the left here, you got your tools section. Okay, this is where all your Gann and Fibonacci tools are. You click on this arrow, and you're gonna get your fib retracement. Okay, so always remember this. Once you click on your fib retracement, now this is the hardest part. This is where everyone gets confused. You are to draw this, write this down, please. Write this down. Everyone write this down, okay? You are to draw this from swing high to swing low if it's a downtrend. Okay, please draw this, write this down. If it's in a downtrend, we go from swing high to swing low. I'm gonna explain what that is, okay? Because you won't find this, you won't find much information about this on the internet. That's why I'm gonna tell you guys from now. Okay, so in a downtrend, we go from swing high to swing low. And in an uptrend, we go from swing low to swing high. Okay? Alright, is everyone good? Now, what that means is swing high, swing low just means the previous high and then the previous structure low. So example, if I'm looking at this region here, okay, right here, where's the previous low? Over here? Okay, over here. Is that the previous low? Correct. Okay, so that's a previous structure low. Where's the previous structure high? Over here? Up there? Beautiful. So that's a previous structure high. How you going, man? All right, so that's previous structure high, okay? Now, when we're on a downtrend, we said we go from high to low, right? Now, here's how you do this. You want to, let's supposedly say in this case, we have two touches, okay? We have 1, 2. So now we've established the trend, correct? And we want to determine where would a possibility where a pullback or a reversal will occur. So what you do is you get your Fibonacci retracement tool, you draw it from previous high in a downtrend to the next swing low, which is around down there, right? Now, the problem with this is when you draw it, it's not extended across because you want to predict what's going to happen after this. See from this point here, this is the swing low, this is the swing high. You want to predict what's going on after the swing low. Okay, so we can just extend it across. Okay, the point is as long as we've drawn it from this swing high to this swing low there, the same distance. Does that make sense? Is everyone with me so far? Lucas, you look confused. Okay, so now this is where things get interesting. Pretty sick. Oh, you sick? Yeah. Oh, fuck, man. Stay. He's got measles, man. All right, so we said from swing high to swing low. You guys are going to see how amazing this thing works, okay? I said before what numbers to watch out for. Who can remember? 618. And what was the other one? 786. Okay. Now these levels here, these are Fibonacci ratios, not numbers, ratios. Big difference, okay? And these ratios, hence why they're less than 1. They're ratios, okay? This is just, this 0.05 doesn't mean it's 0.05. This just means that this is retraced 50%. Does that make sense? So here, would you agree that here's a pullback? Yeah, from swing high to swing low. Now I want to see where the pullback ends so I can look at what, buying or selling? Selling, okay? Because like I said, you get in at the end of the pullback. Now, I want to know how much of this pullback has been retraced. So in other words, I want to know at a rating of from 0 to 100%, I want to know how much of a pullback has occurred. Greetings, how you going? So I want to know how much of the pullback has actually occurred from 0 to 100%, okay? That's where these numbers come into play. So this 0.236 just means 23.6%. This 0.382 just means 38.2%. This 0.5 just means 50%, an example. Now, when do you want to occur? Do you want to enter into a trade that's only retraced, say, 30%? No. Hence the reason why I said don't enter at this point in time, okay? So if you see here, look, the pullback is forming, it's forming, bam, it hit this 0.382 region, time to sell, wrong, because it's only retraced 30% of the way. Why would you want to take a risk on a 30% retracement? Cindy, what's so amusing?
I thought I was.
All right. All right, so now, this is the 0.5 region. So why would we want to enter at 50% of the retracement? That's a 50% risk. I don't want to take that risk, okay? No one wants to gamble their money. So that's why I said watch out for 0.618 and 0.786%. Now, when do you enter? People say to me, enter once it hits 0.68%. Exactly. Bam, get into it. No, because sometimes it hits up to 0.786%. Now, people say, oh, who cares? It's only 20 pips. Like, come on, man. That's the point. You want to get your best entry. You want good risk-reward ratio, okay? You don't want shit risk-reward ratio, okay? By the way, for the new people here, I tend to swear a lot, just saying. Okay, Jacob does too, so please don't be offended, okay? Anyways, now in this case, where would you want to enter best? When the price is between the 61.8% region and the 78.6% region. Okay, when price hits between it. So in this case, price reversing. By the way, this was a random pair. This wasn't planned, okay? You guys picked this out. Yeah, it was fucking random pair. I don't know shit about this, all right? So this is where it reversed. Okay, I don't even trade this pair. You're a cat. Fuck's your account. So now the price is between the region. This is now where we enter what? What sort of a position? Selling, okay? For anyone thinking buy, that's the door, no? We don't want bankruptcy here, okay? We don't want to get sued. So now, here's my question to you. If we enter there on a sell, that's a perfect position. That's a perfect, because now look, we've what's his name? We've retraced 78% of the way. Now, here's a question everyone asks me. Why isn't there, say, an 80 or a 90 or a 100% retracement? Who can tell me that? Who's clever enough? Oh. Why isn't there here? Why is it only up to 78%? Why doesn't it go up to 98 and 100%? Nope. Not just, well, no shit. But why? Why does it not go past 78%? Think like traders. Took. No. This is reversal can occur anywhere there. Nope. Not close, but no. What did I say about pullbacks? They form. Exactly right. And if you retrace the 100%, that means high lows are broken. See what I mean? So then the trend is broken. That's why we don't go. That's why there's no 80, 90, 100%. So between the 61 to 78%, we enter. Now, where does our stop loss go? Exactly right. So above the previous swing high. So when we talk about Fibonacci, we don't talk about higher highs, higher lows anymore. We say swing high, swing low. Okay. So in this case, if we're entering here, where's our previous stop loss go? Above the previous high, here or up there? Up there. Okay, because that's where the pullback occurred. Does that make sense? See how amazing this tool is? It's incredible. Okay, it works most of the time. Now, I'm not going to tell you that, look, it doesn't reverse at 38% and 0.5. No, there have been times where it'll hit 50%, it'll drop. But is that a risk you're willing to take on a 50% retracement? No. And at the same time, your risk-reward ratio wouldn't be as efficient as it is now. Okay, so when we talk about trading, we talk about efficiency. You want to make the most of it. You don't want loss. Okay, just like engineering. I do too much engineering now. So that's any questions with the Fibonacci retracement?
Could you use those points as potential stop loss placements when you're within a trade? Like say,
what do you mean?
Say it starts to move down past 50%. Could you then move your stop loss from the swing high down to 0.618?
So you mean if it starts to reverse here?
No. So say you get in at the point where you said it was between the point.
Oh, so you want to trail your stop loss?
Yeah.
Yeah. You can do that.
It based on those
That's correct. You can, but there's a problem with trailing your stop loss. This is one thing I came to realize later on. The reason as to why also, like, for anyone been using my signal service, many people have been asking me why my stop loss is so big, and I don't trail them. You're not allowing the trade to breathe, man. And the market's a lot of chaos going on with it. So the problem with trailing your stop loss is it's good. Don't get me wrong. If you want to go in the manner where you're profiting, so if you want to say get rid of your take profit, and you want to make profit based off your trailing stop loss, okay, ultimately what are you doing? You're capping your success rate, and you're capping your profit factor at the same time. Now you can trail it for safety reasons, okay? You can trail it. There's nothing wrong with that. The only thing I would advise, rather than say trailing it in profit, is just break even. Make sense? Because if you're breaking even, at least you're having, like, what if this happened? Okay, example. Look what happened here. Perfect example, right? We sold here and it went down. Now, if you went down here to the 0.38% region, and let's say you trailed and you put it back at 0.618, what happened? It went back up. You would have hit your stop loss. See what I mean? That's why you want to allow the trade to breathe. That's why we look at previous swing high. Now, this whole stop loss.
Based on your definition on the pullbacks and whatnot, if it broke through the previous swing high, your entry point, wouldn't that be broken? So couldn't you just place it slightly below where you've entered and then pull it down?
Over here, you mean?
Oh, no, I was
I get what you're saying. Do you see what I'm trying to say? Now, look, there's the one thing about this I should mention. Now, what is it about this I wanted to mention? Great, I forgot.
Wouldn't you put your stop loss at where you put it in
previous swing high.
Entry because
that's right. Now you reminded me. That's correct. Now, why do I say you put your stop loss at the previous swing high? Not because Mo says this, not because Jacob says, because this is what the professionals say. Okay, you put a previous swing high. Okay, so we're not professionals. I mean, like, come on, we're experts. Difference. Yeah. Sounds more nicer. Sounds better. Sounds more professional. I like that one. It sounds more nice. Yeah, sounds more nice. Shut up, bro. Go have the measles and die. Find the corner. All right, so are there any questions with the fib retracement? We're all good on that? Now, same thing for an uptrend. Okay, exactly the same concept. The only time you want to be entering is between the 0.68 region and the 0.786 region, okay? You don't want to enter any time here. And please don't, please, okay? Trust me, don't do it. I've done it, made many mistakes, doesn't work well, okay? So, any questions at all?
One more.
Yes.
What would you be aiming for then? Because look how high your stop loss is and how much you're willing to break is at that previous swing high.
That's correct. That's why you break even. That's why you start to break even.
Okay.
Yeah. So the rule to trading is this, okay? If your stop loss is higher than your take profit, and then you're profiting, and you don't know how far you're going to keep profiting, you start to reduce your stop loss to a point where you get a better success ratio. Sorry, better risk to reward ratio. Does that make sense? So that's how that works. That's a concept with that. Now, in this case, okay, your take profit would have been at the previous low, which is, so if you sold here, previous swing low was here, you hit your take profit. okay? And then when the happening was, it consolidated, okay? So this trend ended, in other words, okay? So, and that's how it should be anyway. You should always put your take profit at the previous swing low, swing high. Are there any questions from anyone? No? Okay. Bonnie, you look confused. You good?
Yeah, for one thing, like you said,
Yep.
you can change your.
The stop loss?
Yeah.
Oh, so does that
How
confuse
often
you?
do how often do you monitor?
Okay, so now depends on the time frame. If you're a scalper, so if you're looking at minute, 5 minute, 10 minute time frame where you're trading, ultimately you want to obviously monitor every minute, you know. But if you're looking on a higher time frame, like this is the 2 hour time frame, right? Which means just from here to here, this is 2 months. Literally just from here to here. This pullback lasted 2 months, from August to October. So you don't have to be monitoring every second. You'd want to at least check it maybe once every day, once every 2 days. You know what I mean? But in terms of your stop loss, like I said, the only time you start to monitor your stop loss is once you're in profit. Okay? Because if you're not in profit and you start to play around with your stop loss and you're at minus, then you're gonna make an emotional mistake, cause you to lose. Okay? That's the fib retracement. No questions? Jesus, you good? My man. All right. Now there is another tool with Fibonacci. This is called the Fibonacci extension tool. Okay? Now this one shows you how far a trade will go. Okay, so in terms of how far a rally will occur. Thanks, bro. So I'll give you an example of how to use that one. Let's find a new one.
None.
Are you like both sending love signals or something?
You know it, Barry.
I don't know. I feel excluded here. Come on, Reese, man. Oh, mate. Nothing is trending, man.
Just use the other one that where you were.
Was it? No, the other one you can't because it's like consolidating after. So it's fine. Fuck it. New Zealand, US dollar. Chad, you're disturbing the class, dude. So no one can focus. Sorry, dude. You're disturbing the class, man.
Does Mohammed normally do anything?
I thought you could sign like the Sphinx Club between you and Jesus and Jacob.
There we go. I don't know what's happening with Jesus and Jacob. Jacob, what's happening with you and Jesus?
I thought you wanted him.
Grinder, mate. That's what's
Oh, I
going
want to. Ah, but I don't want to be a part of that, man. I don't know what shit you're into. All right. So, okay, move, man. Let me see. Move. You got measles? Give me the other chair. Take this chair. For me, measles. If I can get cancer now or something. Man. All right. So now, same concept. All right. Just at the top of your heads. If it's a downtrend, what are we drawing our Fibonacci tool from? Swing high, swing low. Come on. Swing high, swing low. I just gave you the answer. Literally. And for an uptrend, what are we doing? Swing low to swing high. Okay. For anyone that says swing high to swing high, I've got no words. If anyone's saying swing low to swing low, I still like, yeah. And it's happened to me before. That's why I'm saying. If anyone thinks swing high to swing low, the fuck swing high to swing high? You know what I mean? All right. So in this case, is this a valid trend? Yes. Okay. We're making high highs, high lows. Okay. That's the first thing we'll look at. Lower lows, lower highs. Sorry. Okay. So here's one touch. Okay. Here's another touch. But beside those touches, we even got a mini trend. We got one here. Okay. So we've got trends inside a trend. Now we're not going to get complicated and do all this bullshit. Okay. This is for later weeks. So now we grab our Fibonacci tool as per standard. Okay. So we go from swing high to swing low. Okay. Oh wait, what the fuck is this? Oh, that's the retracement. Oh, okay. So grab the fib retracement. Goes swing high to swing low, just over there. Now look at this. This is a perfect example of what I was talking about the retracements. Where did this retrace? Over. Okay. So here's our swing low. I'll draw the circles in so you guys can see what we're doing here. Okay. So here we go. Bam, bam, and bam. Right. Now, where did we retrace off here before we dropped? Between 36 to 50%. You see what I mean? Now, if we had retraced over here, the 61.8%, that's safe to enter. Sorry, no, above the 61. So if this kept going up, and we retraced around here, this is greater than 61.8%, right? So it's between the 0.618 and the 0.786 region. We can enter a sell. Perfect, okay? But in this case, the pullback wasn't completed. Okay, it started to retrace when? Come on, guys. Come on, when did it retrace? 38 to 50. And did I say enter that? No, because it's risky, okay? So this here, we would have not taken a trade. Now, who can tell me why as well we wouldn't have taken the trade regardless? Even if we didn't have to use Fibonacci. Didn't touch the trend line, okay? However, here's the amazing thing about Fibonacci. Look at this. if let's assume that here price kept continuing upwards and went and touched the trend line, what do you notice? It's between the 0.68, the 0.618 and the 0.783 region, 0.786 region. Hence why I told you at first, go between that region only. You see what I mean? So the pullback was completed. That's when you could have entered the sell at this point in time. Now, there's another tool called the Fibonacci extension, which I absolutely hate because it doesn't work most of the time. If you guys want to use it, up to you. So here's a fib retracement tool. Now you have to get the trend-based fib extension, okay? That's what it's called. Now, same story. You go from previous swing high, okay, to next swing low, okay? But now this is a bit weird. You got to go back. Wait, no, was it? I'm tripping out now. I am tripping out. No, it was from swing low. My apologies. It was from swing low to swing high. I haven't used this in so long. Swing low to swing high? Am I tripping out? No. How the fuck did this thing go?
No, I think it's from high to low to the pullback finish.
You know what? Oh no, I got it. Blah, blah, blah. I don't know what the fuck I was doing. Alright, so I was thinking of something else. You go from swing high to swing low, same concept, okay? So that's from our swing high to swing low. Now these numbers, now we're not looking at these ratios no more, okay? Now we're looking at these numbers down here, these regions, okay? This is where things get interesting, okay? Now in this case, we're not looking at, this isn't a retracement by the way, okay? This is an extension, now we're extending it, okay? So this is where we go on to determine where rallies can be, take profits, stop losses. So did you have a question? Oh, sorry, I thought you had a question. All right, so the way you draw it, same thing from swing high to swing low, okay? But this time, please ignore the ratios. We're not looking at those ratios up there because this isn't Fibonacci retracement, this is extension. You're looking at these numbers now, 1.618, 2.618. This doesn't mean that it's retraced 2.618%. No, this is not retraced. This means that it's extended, okay? And what's extended, the pullback or the rally? What are we talking about here? Come on, guys. Guys, come on, this is common sense stuff. Rally, come on, man. Because this is not retracement. This is the opposite of retracement. Okay, so the fib retracement, we look at pullbacks. This one, the extension, we're looking at rallies. Okay, you guys remember what a rally is, yeah? Please tell me you do. Okay, beautiful. So above the previous high or below the previous low. All right, so now the region that we generally extend this to, this is why I said this does not work all the time. Okay, and I'll tell you now. Okay, it doesn't work as efficiently or as effective as the fib retracement. Generally look at the 1.618%. Okay, just before that, just after. Okay, so between this region here. This is where we generally assume that the next rally will go to. Now, who can tell me why this isn't always the case? Who can tell me why this isn't as effective? Think about it. Jacob, you look stoned. So who can tell me? Who can tell me why this isn't effective? Just looking at that. Okay, it did go down, don't get me wrong, it did hit your take profit. Okay, if we look, bam, all the way there, it did retrace. It did actually extend to the, not retrace, sorry, it did extend to the 1.618% region. It did. But who could tell me why it wouldn't be effective? Lucas.
Like, I don't know why, but this is something that we would tell, like, when we have a friend tell us to draw a support line, but not a resistance line.
No, not that, something else.
What you mentioned earlier, there's a trend within a trend. So
Not that either. Nope, something else. Something to do with consolidation. Okay, how about if I ask this? Would this be easier? Okay. So we know a trend is composed of high highs, high lows, right? So in this case, we're clearly making lower lows and lower highs, right? The definition of a Fibonacci extension tool, not a retracement, of an extension tool, shows you where the next lower low or next higher high will extend to, correct? However, is it always guaranteed that it'll make a lower low and a lower high, and a high high, sorry? Exactly, it's not guaranteed. That's why that's a chance. Now you see why we don't work off of this purely? That's what I mean. When is this effective, however? Once you've broken the previous high high or the previous lower low. Does that make sense? So once you actually see that there's a rally being made, then you draw this beast, so then you can know where you put your take profit if you've already entered into the trade based off the Fibonacci retracement. Now you know how the whole Fibonacci theory works into play. Now, there are other things called Fibonacci wedges, Fibonacci spirals, and Fibonacci arcs. I'm not going to cover any of this because I personally don't even know what the fuck's going on with that shit. Okay, this here is enough for me to understand that this works. Okay, I made a lot of money from this. Jacob, have you ever used this? Nope. Okay, so Jacob hasn't. So, yeah, That's basically the fib theory, okay? Are there any questions on Fibonacci before we continue? Because now is the time to ask. The extension part? Okay, it's very simple, okay? I'll explain it very quickly one last time.
Do I need to move again?
No, stay there, man. All right, it's very simple, okay? Fibonacci retracement tool, okay? We're talking about Fibonacci retracements. In other words, Fibonacci pullbacks. So we're dealing with pullbacks. So that's where we know where to enter. Fibonacci extension, we're not talking about pullbacks. What's the opposite of a pullback? A rally. You know what a rally is? So we're talking about a rally, okay? However, we're not talking about when a rally will occur. We're talking about how far a rally can go. Where will it go? So the way we do is we grab the Fibonacci extension tool. Same story from previous swing high to swing low. Okay. Now, once you click the second time, this is going to come up. But you have to take it back up to the swing high. Okay. That's just how the software works. I don't know why. Okay. Now, once we got that, we'll just move this across so we can see what's going to happen. Are you with me so far? Is everyone with me so far? We're good so far? All right. How you going, man? Not too bad. Class finished, bro. No, I'm just kidding. Yeah. All right. So I'll do that to everyone. It's all good. So, what Pasan? Yeah, you're Pasan. Yeah, my man. I know you, bro. I like it. This guy's my man. This is all right, man. All right, so now basically, as I was saying, so once you've retraced, okay, once you enter, let's assume as an example, let's just assume in this case that we retraced back at the 0.618 to the 0.786% region. By the way, here it's inverted. That's why I say do not use these ratios, okay? You have to use a Fibonacci retracement. So let's assume we entered the trade, we're in a sell, we place a stop loss, bam. Now, I want to know how far is this going to go? Where do I place my take profit? I have no fucking idea, okay? So here's how we do it. Once you enter the trade, let's say we entered back up here somewhere, okay? Up here. I'm going to draw it just to show you guys how this works. Okay, price came down. Let's assume price came back up, hit the trend line. We enter the trade over here. Everyone with me so far? Okay, we enter a selling position. Stop loss goes back up here, agree? Above the previous swing line. Now, as price is falling, okay, as price is falling, bam, let's say we got to that point there. Now, what's that? Where have we gotten to? Previous swing low, okay? And in this case, one of two things can happen now. It can start to consolidate and reverse from there, okay? And that's where you start to take your profit. Or it can break below that and make a what? A lower low. Now, if it breaks below that and you start to make a lower low, okay, that's where the Fibonacci extension tool comes into play. You want to look at setting your take profit at the 1.6810 region, which you eventually hit over here. So now you've made all this profit. Does that make sense? That's how that works. The only time, and I'll tell you now, the only time you use the extension tool is if it's starting to rally, not if it starts to consolidate. Please understand that, okay? We good? Does that make sense, Alex? We good, man? All right, sweet. And that's all of Fibonacci. Does anyone have any questions about Fib? You're a crack up, man. Fucking love you, Jacob. All right, so no one has any questions to make? Nothing? All right, anyone at all? Raise, Jesus, good then. Rami, you have any questions? You good? All right. So now, that's Fibs. Now, ABCD pattern. This is very quick. It'll take 5 minutes to explain. Very simple. Works with pullbacks. Similar to a Fibonacci retracement, okay? Wait, just be careful you guys don't close the door fully if you guys are leaving because your locks. So, now the way ABCD patterns work, it's exactly like a trend, but now we're looking at pullbacks, okay? So the first touch, we call this point A. Then we have a rally. The end of the rally, call this point B, okay? Well, is this an uptrend or a downtrend? Downtrend, okay? So by the way, there's no like fancy high, swing high and swing low words with this one, no, okay? It's just bam, high highs, high lows. So we start at point A. Now we call this point B, and I'm going to show you how to draw this. Once the pullback finishes, this is known now as point C. Okay? Then, when the next rally finishes, we call this point D. And now this is where we look at buying. Okay? So you're buying in a downtrend. Now you think, what the fuck? Why would you be buying in a downtrend? That's where you would buy the pullback. Okay? How many people have asked? Because I've had so many people ask me, okay, why do you go against the trend? Because this thing. Now, I'm not going to tell you all to go and do this. This is why I'm not going to go into detail on this. Because if you guys do this wrong, you're going against the trend in the wrong manner, you will lose a lot of money. So this is at your own risk, okay? This is at your own discretion. If you choose to use this, it's at your own discretion, okay? Now, once you draw this, you're going to get these numbers. 0.608, 1.285. Who can tell me what this means? Because clearly here you could see a pattern, right? And you've got these numbers. Okay, you could say that this is the length from B to D. Okay, a bit of math here. This is the length from A to C. And you got these numbers between them. Who can tell me what this means? By the way, sorry to go for a sec. This isn't Fibonacci, by the way. These aren't extensions. Fibonacci retracements. So who can tell me what these numbers are? Sorry? No, not time ratio. It's to do with length. But the length of what?
Says half the length of that equation.
No, not C's half. We're not doing like Pythagoras theorem or trigonometry in this. No, we're not doing half a squared equals whatever the fuck it is, alright? We're not doing that shit. And we're not talking about area in this, okay? There's no calculating the area inside a triangle. We've done plenty of that in high school and whatever. Okay, there's no time for investing to do that shit. You're not going to sit down and be like, oh, look, there's a stock going up. Wait, let me get my fucking Pythagorean theorem first. Let me do a squared plus b squared equals... We're not doing none of that, okay?
Sure, just
So-
look at the moon.
It's yes, look at the moon. I fucking love you, Chad. You're a classic. What this number means, this just means how much, okay, the rallies retraced and the pullbacks, sorry, not retraced, how much the rally extended, not on a Fibonacci perspective, okay? Please understand this. How much the rally extended and how much the pullback retraced. I'll explain. If we get 0.608% here, okay, that's 60.8%. What's this known as? Okay, fuck. Basically, the 0.608 just means, I'll make it very clear once, okay? It just means this is how much you've retraced from point A, okay? And what did I say about this fancy 0.608, 0.618 and the 0.786? You want to look at selling if it's a downtrend, then buying if it's an uptrend, okay? So this gives you further confirmation. Now, here's the amazing thing about this pattern. The reason I showed you this today is because this works with Fibonacci retracement as well. So if you actually got the Fib tool and you retraced it here, you will see it went between the 0.618 region. You see what I mean? And that there's extra confirmation. This is where we talk about now teeing up different techniques, different strategies into one, so you can identify different opportunities. Are you dying there, bro? You're right. What's happening to you? I think he's got the measles. I actually think he's got the measles, man. You're right, man. Seriously, you're good.
I just got red eyes and was just missing.
Red eyes.
It was cold at my house last night. So.
Chlamydial.
I slept without.
He's got chlamydial conjunctivitis, for anyone that knows that.
I slept without the dinner on. I got
Alright, so okay, so now this 1.28, so from B to D, the length from B to D is how much the rally extended. Okay. Now here's the thing: if it's greater than 1 usually, okay, we want to look at buying the pullback because it might mean it's an aggressive pullback. However, in this case, was it aggressive? It wasn't. Okay, it was slow. That's why I say this isn't very reliable. And it's good for confirmation to know how much the retracement occurred, yes, but it's not reliable. Does that make sense? Does anyone have any questions? We're all good? Yeah? Jesus? Good? Alright, sweet. You good? Sweet. You good? Alright, so what's the next slide? So poshy. Alright, now I'll take 2 minutes. I'm just going to show them how to draw up.
That's my files. There you go.
Alright, so we'll take, as an example, we'll take a look back at this trend here, okay? So, let me just see it, man. Better not have them easy. So the way you bring this up, now we're not going to look at the fib and tools section. We're going to look at this here. See how you got these funny looking circles and lines, whatever? This is your pattern list, okay? It's not the X, A, B, C, D pattern. Be very careful, okay? It's not that one. We're looking at the A, B, C, D pattern, the third one down. So once we click on that, we can take, so in this case here, this is our first swing high of the downtrend. Okay, that's our point what? A. Our point B is the next swing low. Our point C is the next swing high. And our point D is the next swing what? Low. Now, here's the amazing thing. From A to C, did it retrace between the 0.68 region? From A to C, yeah. So was the pullback sufficient enough to give us, look, time to sell? Yes or no? Sorry, be very careful, man. Remember I said between the 0.618 and between 0.786. Okay? Jesus Christ. I actually think I'm going to get sick from it. I'm going to stand here, man. I don't want to fucking I'm going to get measles and cancer and shit. Okay, all right. However, look at the extension. Is it greater than 1?
It comes in sets of threes. It just starts, you know. You just
What is that, a workout or something? But I finished my first set. Top set 2, 3. All right.
It goes in threes.
Alright, so you should look at taking medication or something, man. So, oh, sorry, Harami, yeah, what's up?
If you're looking at live data, how would you determine point D? Like, how would you know that?
No, that's what I'm saying. You only put point D once a reversal occurs. I'll show you what I mean, I'll show you. That's why you have to tee it up with your extension tool and your support resistance levels. It's not easy. That's why I say this is not as easy as it looks, believe me, okay? Now, when you look at point D, is it greater than 1? So it tells you there could be an aggressive buy. So in this case, was it a buy? Yes, it went up. Okay, you would have made probably on the 2-hour time frame, you would have made around 100, 150 pips on this, which is a good gain. But what's the problem with it? You don't know where it's going to end. You don't know unless you use what? Fibonacci retracement. But what's the problem with Fibonacci retracement? You still don't know where it's going to retrace to. See why I say this is risky? And this is why I told you if you guys want to use this, it's at your own discretion, okay? So that's all about the ABCD pattern. Are there any questions from anyone? We're all good? Okay. Next. You just say, I can't wait till this guy starts teaching. He'll be like, now the ADX, oh fuck me there. Alright, so this stands for the average directional moving index. This is the... Is the thing recording still?
Yeah, no.
Alright, sweet, alright. Now, the ADX, okay, I like to refer to this as a piece of shit. Okay, the only reason I like to refer to it as a piece of shit is because it's a fucking piece of shit. Okay, Chad would know, my man. Harami would know. Anyone from last semester? You there? Yep. Okay, it's a piece of shit. Now the reason it's a piece of shit is because when you look at these lines, you're looking like fuck this shit. Okay? I don't know. I don't want to look at this, but you have to look at it. This is a trend strength indicator. Okay, you're looking at the strength of a trend, not a consolidation period. Please understand this. So if you see a trend and you want to see how aggressive it is, how much momentum is it, you could use the ADX. Okay, and it stands for the moving average directional index. Okay? No, sorry, the average moving directional index.
Where's the MMA?
Go ask the creator, I don't know.
Average direction.
It's not the average, it's the average directional moving index. I'm a pro in this, shut the fuck up, bro, it's my shit, alright? You sit there and die from measles. So going on, alright? Now we have, it consists of the ADX line, the black line is the ADX, okay? I'll explain what that is. Okay, by the way, what's this referred to as? What's this measuring? Good. Strength of what? Of a trend. All right, good. Now, these red and green lines, we have something called the DI plus, which stands for directional index positive, and the DI minus, which stands for directional index minus. Okay. By the way, I don't even know how I remember this off the top of my head. Okay, it's just, you can tell I've had some bad luck with this thing. So, the DI plus, okay, is the green line, and the DI minus is the red line. Then you have a threshold level. You see this horizontal level here? Generally it's at the 20 mark, okay? It could be sometimes at 23, 24, depends on the indicator you're using, okay? But it's generally at that mark. The way that works is this. Let's not look at the DI plus or the DI minus right now. Let's just look at the ADX, the black line. If the ADX, write this down. Dude, you're getting a call. Imagine it's Raise.
No. Yeah, recording resume.
Put it on silent. Put it on sleep mode.
I thought I put it on airplane mode.
Put it on something.
Said my computer's about to freeze. That's what the person said. I hate getting telemarketing.
Alright, so yeah, that's the worst. Alright, so now please write this down. Okay, when the ADX is above the threshold level, it is gaining strength. Write this down. It is gaining strength. What's gaining strength? The trend. Okay. So when the ADX is above the threshold level, the trend is gaining strength. When the ADX is below the threshold level, the ADX is losing strength. Okay. Is everyone good with that so far? All right. Now, with that being said, this is how we determine now how strong a trend is. Example. Let's take a perfect example. Over here, we have a downtrend. Okay. And the ADX is below the threshold. So it's started to lose strength. Let's ignore that. Okay, let's just look at this point here. Starting to lose strength, correct? Is this a good thing for a downtrend, yes or no? If the trend's losing strength, is that a good thing? No. For a downtrend, guys. If it's a downtrend, do you want it to be gaining strength or losing strength? Losing strength. Because if you're losing strength in a trend, there's no momentum. Trend is going to go down. That's why it's going down here, okay? But when the ADX is above it, it's gaining strength. Now here's the thing that confuses everyone. It does not represent the strength for the overall trend, because you can't see what's going on in the future, okay? If that was the case, then we'd be fucking billionaires, okay? It's showing you what's happening at that same point in time. So example, if you look here, okay, we saw a pullback, okay? And then the ADX is gaining strength. So that could tell us, well, hang on a second. How's it gaining strength, okay, if we're in a pullback? Doesn't mean now it's an uptrend. That's where the DI plus, DI minus come into play. The DI plus and the DI minus, hang on, Sadiq.
I'm good, thanks. Sorry I'm
I'm
late.
saying it's very quiet today, man. There's no one asking questions, no one talking. It's very quiet today, man. I'm saying it, someone's missing here. Hey, Ben, bro, how's everything going? All right, so. It's like, hey, Ben, man, how's everything going?
Oh, are you kidding? I've been like buried in the paperwork. We don't want to hear from me.
Ah, that's all right, bro. You don't want to hear from Jacob, trust me. He's got cancer today. No, he's actually got cancer today. He's just dying today. He's got measles or something. I don't fucking know. Fucking AIDS or something. Anyway, so going on.
Wait, what did I miss out on, by the way?
A lot of things. Okay, we've done Fibonacci, ABCD patterns. So yeah, I'm not going to cover it because it's going to take a very long time. So just revise over the lecture online. So it should take like half an hour or so. Yeah.
Wait, how late am I? An hour.
It started at 12 today. We made
Okay,
we made a Facebook post. That's why we said at 12.
yeah, see, that's why. Okay, so.
Ah, that's why. Yeah, that's all right, man. It's all good. So I was saying, like, it's very quiet today. Something's not usual. Like, because everyone's quiet. No one's asking me questions. I'm like, where's the guy that always asks me the questions? It makes it fun, makes it challenging, you know? It's not here. But you're here now. So I'm ready for a challenge today, man. Exactly. I'm ready for the challenge today. So the way it works is simple. Now, buy signal, sell signal with this thing. Okay, write this down. Very simple. You buy when the DI plus, which is the green, is above the red. However, it has to be above the threshold. Both of them. If there's a crossover above the threshold. I'll give you an example. Here, see this green line? Okay, guys, look here. Can you guys see this? Everyone look up. Please, everyone look up. Stop typing, stop writing. Everyone look up. All your heads up. See here, this green line? It crossed above the red line, above the threshold. Move the fucking cursor, man. Move that shit. No, I'm just joking. See the threshold level? You guys see the horizontal level? It crossed above the red, but they both crossed above the threshold. This is a buy signal. Hence the reason why at that point in time it went up. Okay? Now what aids this is if the ADX is also above the threshold. Does that make sense? So the best way to remember it is like this. For a buy signal, the ADX, okay, the DI plus and the DI minus must be above the threshold, all three of them. At the same time, the DI plus must be above the DI minus. Does that make sense? This tells you now that it could be short-term gain in momentum or it could be long-term gain in momentum. We'll look at buying. Vice versa at selling. Okay? Yes, Alex.
Where it crosses there, would you actually buy it? Like,
What's a downtrend? So, no. So, but I'm just giving it for like explanation purposes. I'll give you another example, okay? Here, this is a perfect time to sell. Perfect time. The ADX at this point in time is below the threshold. We're in a downtrend. Okay, we've almost completed the pullback, or you could say we have. At the same time, the red crossed above the green. So the DI minus crossed above the DI plus. Does this mean time to sell? Yeah, it's time to sell. However, did it cross above the threshold? Yes or no? It did. So time to sell. Okay? That's how that works. Is anyone confused? Cindy, you look like you're having a nightmare there. You good? All right, you good. Everyone else good?
Just remember that this is an indicator, so it is live.
Exactly right. All indicators dark, okay? Jesus, you good? Alright, sweet. Bro, you can predict all this shit. You don't need to know this for fucking... Alright. You guys at the back good? You guys all good? Sweet? Alright. My man, you look confused there, man. You good? You good? Alright, sweet. So that's the ADX, okay? Now, how reliable is this? It's not too reliable. It's good to have an understanding of its strength. The reason it's not reliable, like I said, is because it's not showing you the overall perspective of what's going on. It shows you quick, rapid changes, and we don't like rapid changes because it's too quick for us to trade with, okay?
Isn't this one of your top 3 indicators?
No, it's not.
Like the super trend, the ADX, and DMI, and
We're in the...
stochastic.
that was last semester.
That was last year, yeah, but wait, okay, let me say something. If the stochastics is my favorite indicator, I would not be teaching this. Trust me, okay? No, nowhere near. The super trend, yes, and the other two will be my indicators.
Oh, okay.
Yeah. So, any questions? Any questions? Shut up, you die of measles, right?
What's the next one?
And I think that's, what the fuck did you do, man?
Mate, listen, I don't really know what I'm doing.
That's alright, mate. You're alright, mate.
I copied your one twice or something.
Yeah, you're a fraud, mate. All right, and that's ADX. Are there any questions? No? All right. About anything, by the way, up to now. Yeah, time for question time. Also, we're going to have a 5-minute break.
Yeah, we're gonna have a 5-minute break
Or
before we
we'll
start
have like
the
a
entry
5, 6, 7-ish minute break. If you guys are hungry, by the way, okay, the great Bonnie, okay, she bought us some food.
No, we'll save that for after, so you know we'll have to sit down, we'll chill. Unless Bonnie wants to eat it now, wherever she is.
No, like, shut up.
Yeah, so it's only been now, dude. Like, chill out.
It's up to you guys. I mean, she's like, freaking, shut up, I'm offering.
Alright, 5-minute break. Come back in 5 minutes. 5-minute break. Go do whatever you want. What's going on, man? Yeah, I'll come. Just leave everything recording.
I'm in a love-hate relationship. Macro-analysis, micro-analysis.
Bonnie, just throw
A lot of it is like,
Can I give them out?
you can do it.
it's something like, okay, and then I'll explain it more and more.
Does anyone want some? On the table.
Crazy crossover.
Yeah. Grace.
And then Grace on there. And then leadership.
Yo.
You're a real one for this.
I know, I saw that.
Wait, listen, can I steal the laptop for a sec? I just want to see what I missed out on.
Yeah, sure. That's alright.
Yeah, sure.
Can you go back to the trading view for your ABCD?
Oh, sure, yeah, I'll show them 1 second.
That's exactly what I'm after.
Yeah.
Perfect.
2 Einsteins, huh?
I wait. Maybe you are, but I don't think I am.
Alright, so let's see. Oh, there's eggs here. Thanks, Bonnie. Where's bonbons?
Yeah, but you know what? I feel like the drink right now, so.
Alright, so what did you want to see? We'll start with
ABCD.
the ABCD thing. Okay.
Yeah.
So the here on the slides or
For the example, you.
oh for the actual trade.
For the. Yeah, just right here.
Yep.
For B, if I looked at it, I would just put it here. C here, D here.
You could do that too. Yeah.
Oh, it's the same thing. It's just
you
different
could-
scale.
Exactly right. Doesn't matter. The scale doesn't matter. You're looking at the numbers. These are what matter, not where you draw it to. Doesn't
Oh,
matter.
as long as you have the low in the at the right
Look here,
place.
brother. Could do this if you want to. Look at this. Okay. Sure. Hey, brother, here, could do this if you want to. Okay. Here's A, B, okay, C, D. 0.852%. That's even higher than 70%. Bang, you got it yourself.
Wait, what is it? Are these harmonics? Is that what you're trying to teach us?
No, this isn't harmonics. This tees up a bit into harmonics, but this is with pullbacks. Okay, this deals with pullbacks and extensions. So revise the first half an hour and you'll understand what it is.
Okay,
Yeah, this
okay.
is to do with Fibonacci.
Are we learning harmonics as well?
No, that don't work.
Harmonics is
The back pattern and all that stuff.
it's pseudoscience.
Yeah. Oh, you know, for Tau theory, I was gonna ask.
Yeah, bro.
You know how like when you say it's consolidating when it breaks through, like a break. So for example, when a high, like it breaks through it. Oh, sorry, it doesn't make another high. What about, and you say for example, we're going from the uptrend to the downtrend. What about if it goes down to a high low and then it just shoots up and doesn't retest and just keeps going up? Like how would you know that? Huh?
I'll show you.
How would you know? Say for example, like
Yeah, let's do it. Okay. Lower low, low.
yeah,
Lower high.
low, low,
Lower low.
yeah,
Lower high.
yeah,
Okay. Low.
yeah,
Then make the lower low. Went up. Is what you mean?
yeah. But what about if you have that, but it goes like that, like it stops there, and then it just fucking rockets up.
So it just goes up like this?
That's it, and then doesn't retest.
Very good. Very easy.
How would you know that?
Very
How
easy.
would you know that?
Here's lower, here's low.
Yeah.
Lower high. Lower low. We broke past the previous lower high, which means now we're in a high high. This has now become a high high, and that's previous high low.
But you said that it's not
consolidates?
It's not
No.
confirmation until it retests.
Exactly right. So when do we confirm that this is now an uptrend? Then we get our high low, then a high high, then a high low, and then a high high, and so forth. Does that make sense to you?
Yeah.
If you're confused, tell me so I can explain it better.
No, so I'm just wondering, so you make a lower high, so high low, lower low, high low,
Yeah.
and then you break up. So when that initial break happens, so when we don't make a lower low and that initial break happens, what would you say that's just
The initial break, consolidation.
okay, and then
That's why
down.
you don't do anything during consolidation.
Okay, and then down there, and once it retests, would you trade when it hits that support line, or would you trade after confirmation that it's gone back up?
After confirmation.
Because you still don't know if it's high, you still don't know if it's in a trend or if it's.
Because it's still consolidating. So we're assuming it's still consolidating. Until we have enough confirmation that it's indeed changed the direction of its of the trend. Does that make sense?
Yeah, it makes sense.
Yeah. So that's how that works out with the Dow theory. But the problem with Dow theory is many people they take it into different conceptions. They take different ideas about it. It's very, very simple, you know. But yeah, that's how that works.
That's crazy.
So yeah.
But would you say, you know how you're saying to go with the trend, right? That means you're basically just trading pullbacks.
Yeah,
Right?
that's right.
That's what that means. If you're going with the trend,
Trade the
you're
pullback
only
and then you
trading.
ride the rally.
Yeah, and you're only trading the pullbacks, right?
Exactly right, yeah. That's why you don't go against the trend and trade the beginning of a pullback. That's why it's risky with the ABCD thing.
Yeah, that's trading. When you say you do an ABCD pattern, right? Are you that's not a reversal. That's just a pullback, isn't it?
Exactly right. It's just a pullback, yeah. So you're measuring the length of that pullback, and it gives you more confirmation. That's why if you tear that up with a Fibonacci retracement tool, you got it. You know what I mean?
Yeah.
So that's how it works.
So okay. So you're trading the pullback with the ADC pattern. You're not trading an actual reversal.
That's right. Yes, that's how it works.
Okay.
Yeah, right. Yeah,
That's crazy. You know the pitch box as well, no?
Nope, it's nothing to do with that.
So you only know Fib Dow?
I don't touch it for
Yeah?
too much effort. I'm involved.
But what about like channels and all that? You don't know?
Industrial escalate and like one of them was like
there's a whole heap of stuff. If you go through German, French, bullshit, which doesn't count. How sick is this? They cut it in half into 2 periods. So it was good spreading last week.
Yeah, my last week was Wednesday night. I didn't sleep at all. I didn't sleep. I was through a teaching my I was studying 3, 5, 6 the whole week. And I'm like, everything was in place. It's because everyone's doing
Yeah.
I ended up looking at the end, figuring it out myself. I was up and that's work at 7 a.m. So I finished this summit at 6 a.m. and then head to work for 2 weeks. And then came back to work and it was like midday. Submitted online. I did it and then I came back to work and handed it next time and then didn't sleep. The night after. Did you actually get it? And I was just dying for a whole week.
Honestly, first day felt like
Yeah, I came in like 4 pajamas. I was trying not to run into anyone. Everyone was like, how do you do like, I'm tasting this.
Why the hell would
Hey dude, what's up with your laptop? It's not letting me the keyboard type.
Huh?
It's not letting me the keyboard type.
What do you mean?
I click Q, it just does that. Maybe there's like a pop-up open somewhere. Minimize it, minimize it. Pop-up. Nice, is the keyboard disabled?
Fight me out.
One of these chocolates. Huh? Bonnie.
God bless us.
Huh? Fucking legend. What a fucking team. Hey, you got Adam? Yeah. I was swinging. Thanks, bro. What was the problem with it?
Just fucked up.
What fucked up?
I don't know, my computer. You know what my favourite ones of these are? I love the purple.
Ah, the red ones.
Nah,
Wow.
you're cooked, bro.
Ah, hey, the red one.
Nah. Grape is better than strawberry any day.
I'll agree to that. I would take it back.
Scott was off his head at your birthday, remember? Who? You were off your head at his birthday.
I was so pumped. Yeah, absolutely. It was pretty funny, bro. I had a good time. You enjoy yourself? Where did we go after we
And I necked a bottle of wine or dancing, singing.
That was fucking, remember the karaoke? That was
funny.
I tell you, that was messed. This guy was off his head. Remember?
I vomited like fucking 8 times.
What, 8 times?
Yeah, I was very, very dusty.
It went for a while.
Right, let's get back into it. They're back.
Yeah, that's exactly
Is this still recording? No, it is. Everything's still recording. All right. Everyone, shut up. All right, let's get back into it. I was going to be nice about it, but okay. Be a dickhead. That's fine. All right, so hope everyone enjoyed your little break because we're going to get straight into Andrew's pitchfork. Now, there's two main conflicts with Andrew's pitchfork, or I guess two main people when you want to talk about Andrew's pitchfork to someone. Some people think it's great. Some people think it's like the worst thing in the world. Reason why people think it's useless and can't be applied to anything is because all it does is pretty much highlights support and resistance. What are you doing? It pretty much highlights support and resistance. You know there's an off button right there. Okay. It just highlights support and resistance lines that can't generally be seen with your naked eye. So for me, I think that's one of the most valuable things of any strategy or any tool or any indicator, to be able to highlight support and resistance lines that you generally can't see. So there are 4 major pitchforks. There's your standard Andrew's pitchfork, Andrew being the guy that created it. Then you've got your Schiff pitchfork, your modified Schiff, and then you've got your insider pitchfork, which was actually recently uploaded to TradeView. So it's very good to see that they're constantly updating their database. The features are pretty much generic across the board. You've got your three points, or your higher. You go from your ABC pattern, so high, low, high, or low, high, low. Pretty straightforward. What we're testing, or what we want to know, or what we want to identify is points of validation. So it works in a very similar fashion to that of your trend lines or your support resistance. You don't want to just put a pitchfork on and have it touch once. You want to have multiple touches over a few periods. Now let's talk about the layout, because a lot of people seem to, I guess, fuck this up. There is only one median line. Median line being the middle line. What that tends to identify, it identifies the trend. So if you want to draw your pitchfork, your median line needs to be following the trend. If it's going on an uptrend, your median line needs to be going up. You don't want to be on an uptrend and your median line going down. You'll see what that means in the coming slides. You have an upper parallel, pretty straightforward, a lower parallel, and you have two quartiles. Some people like to call this the upper median and the lower median. If you have any kind of living brain cells, you'll be able to tell straight away that a median means middle, so having an upper middle and a lower middle is kind of borderline on the spectrum. Anyway, so we'll move on to common misconceptions. So again, with most of the things that we've done, you don't want to just do it by that thing alone, and that's no exception with Andrew's pitchfork or any of the pitchforks. You need to have a variety of different tools or different strategies. You don't just want to be going after one thing. So although the pitchforks are great, you need to incorporate your Fibonacci, your basic trend, and even some indicators if that's what tickles your fancy. So we're going to go through some common misconceptions. A pitchfork can be drawn immediately. It can be a trade can be traded once a pitchfork is drawn on it. That's incorrect. You need to have several tests. So that's what we kind of want. We want validation. We want to be able to seek and to be able to identify that the pitchfork is actually true. And that goes back to that multiple touch things. Again, there's no need for validation. A lot of people think that a pitchfork, because it shows support and resistance, it's pretty much God's word. Absolutely, that's incorrect. A pitchfork doesn't rely on previous data points. Anyone that thinks any support resistance line doesn't rely on previous data points, I'd ask you, how do you draw it then? There are only two support and resistance lines. That's actually incorrect. There are four. That being the upper parallel, the upper and the lower quartile. There's five actually, my bad. The two quartiles, the upper and lower parallel, and the median. They all act as support resistance lines. It's up to you to determine what they are though. You can base that off previous data. We can trade against the fork. That's autistic. Change in behaviors are irrelevant. Change in behaviors are the most relevant thing to trading. What does a change in behavior mean? I mean going from an upward trend to a downward trend, or from a sideways movement to an upward trend. You need to take these into consideration when you're plotting your pitchforks or when you're just trading in general. So let's go to an example. I think I've got one. This is just the applications of a pitchfork. Identify the trend or slope. It's borderline what Garn suggested in a lot of his work. However, this one works pretty much on just trying to identify support resistance areas. It is a means to an end. What does that mean? It kind of helps you to identify, I guess, it kind of encompasses what you should have in your strategy. You need to have something that identifies your support resistance areas. This will do it very well. And it's identify the asset price movement spectrum. So what does that mean? From high to low, low to high, and anything in between. Does anyone have any questions about that little summary there? No? Fantastic.
I suppose for your grinder account.
In the mouth. All right, this is an example. We have our start point here, A, B, and C. Why have I picked these points? They are not arbitrary. There's a good reason. Why wouldn't I have gone to this one? I feel like that's just too far back in this case. So I've gone for that point. I've chosen the highest point that's available, and then I've chosen this point here, even though that's slightly off, it's relatively okay. How do I know that this is valid? Well, we've got one touch there, obviously, but we've got a few touches slightly after. We've got there. For me, that's valid enough. That's a very successful pitchfork drawn. Resistance, it hasn't gone up to the upper quartile or the upper parallel. That's fine, it doesn't have to. For most of the situation, the lower parallel and the lower quartile have been used as support and resistance lines. Immediately you can see opportunities for you to enter and exit into trades. If you were to enter here, obviously exit there. Would you enter into a short straight away? Absolutely not. Never do a double movement. A double movement means you exit and then re-enter into on the same candlestick. You always want the candlestick to close, and you want to be able to see where the trend's going to go. So this acts as a suggestion for exit. It shouldn't act for a suggestion for you to entry if you've just exited in the same trend. So if we were to go here, this could be a potential entry point for you for a short, as it is approaching. However, it can be a bit risky because it actually hasn't reached the full maturity of the lower quartile. Can anyone tell me why I might have highlighted this section here?
Because you may think it's going to be a cell, but then
Absolutely, and this goes back. It has gone into a shell, but what we have here is we have a potential change in behaviour. Now, how can we identify that? The fact that it's bounced back up. Usually what you'll tend to see with these kind of trends is once a trend is initiated, it will continue until it's met, get different momentum of pressure. So assets tend to follow the path of least resistance. Path of least resistance being whatever, it pretty much just follows momentum. So in this situation, the momentum is clearly upward trend. Although it has deviated from just a straight upward trend, it is still overall following an upward trend. So with a lot of pressure and buyers obviously pushing that upward trend, that's what you're going to get. You might get situations where you get this little drop, but overall it continues. Now, how do we know when this pitchfork is no longer valid? Well, quite simply, when it dips below the lower or upper quartile significantly. What is significant? That's for you to decide. Usually I tend to go with the idea that as soon as it goes into sideways movement, after it's dipped out, then it would be the end of the pitchfork for me. So in this situation, why would I not be interested in even in a retest here? Just because it's dipped quite significantly. You know, in this situation here, you're looking at maybe 30, 40 pips there. So I would not be interested in getting into that in any sense. For me, if I was to do anything, I would potentially look at drawing another pitchfork, maybe there, and there, and trying to get that spectrum there. Just because this is a normal pitchfork, it has no adjustments on the X or Y axis. Some of the modified and even the shift have adjustments on the X and Y axis. This one does not. Do you have any questions about the normal interest pitchfork? Yes?
We were just talking about ABCD whatever, right?
Yep.
That has nothing to do with ABCD up there, yeah?
No, this is ABC.
Okay.
So pretty much just start, high, low. That's pretty much what it is. I just say ABC. It's just easy. Any other questions? Does everyone understand how you use the standard one? Cool.
You must be, your knuckles get hairier.
You're fucked. It is like that. Okay. Unmodified shift pitchfork. What does the unmodified one? It takes in, for adjustment, I think it's the x-axis, but not the y. So what does that mean? We go A, B, C. The tail, instead of starting from here and going that way, tends to start here. What does this mean? It allows for a more aggressive angle. If we are to compare it to the previous one, you'll see this one tends to follow just in a straight upward trend and follows the tail pretty much as is. This one allows for some degree of adjustment for you to be able to capture those trends that aren't on significant upward trend or downward trend. Allows pretty much for you to customize your strategy, allows for you to see opportunities that you might not be able to see with either your eye or with the standard pitchfork. It's probably one that you'll see more often. It's not often that you do use the standard Andrews pitchfork, as we do not live in a perfect world. We need to make adjustments for price. However, the theory is exactly the same. As you can see, we really wouldn't be interested in this section here, as we don't start to see significant testing until about this section here. So let's say we're at this point here. We have tests that what do I call that? The lower blue line. I've forgotten what it was called just for a second. Oh well, doesn't matter. So as we can see here, the blue line and the lower quartile have been tested to be quite successful, and we can say that in this situation here, it's changed to support with the median line acting as resistance with tests here. So if we were in this situation, we could quite easily enter into a short there, take profit there. If we wanted to, we'd re-enter into a buy a few hours later, I think I did this on the hourly time frame, and we could just do the same and trade just like that. If we could enter into a short here. If you wanted to take a bit of a risk, you could hold to potentially here. However, in this down section here, you don't have a pitchfork there, so it's unlikely that you'd want to continue to hold the asset. Does anyone have any questions about that one? Go with Chad first.
So you don't hold a position when it exits the pitchfork?
Unless you can draw or make a new pitchfork, you shouldn't be holding it. So
It's one of those lines.
this should be your close area, as it has tested as support in the past. For me, I'd rather make $50 than potentially risk 150 if this was to reverse on me. So that's just kind of the idea and the theory behind that.
Wait, earlier you spoke about the angle of the pitchfork itself. I don't know if I lost you, but what did you say exactly about the angle? How would you determine that?
What do you mean the angle?
Yeah, that's hilarious.
So yeah, I do have a comparison one where I pulled up three.
Oh, okay.
No, you don't use a protractor. The computer does it for you, which is fantastic. So as you can see, I've picked out A, B, and C. If we were just using the standard pitchfork, what would actually happen is that the pitchfork would go up like that. It's taken an adjustment of 50% on the, I think this is the x-axis, so for price consideration. So instead of the tail being here, it gets moved up to there and allows you to get a different kind of angle that you wouldn't be able to get in this situation with a normal pitchfork. If we're looking at trying to use a normal pitchfork, you could potentially go here, here, and here, but then again, you'd still get the angle going up there. This just allows for you to capture different trends.
So that's it all for you. So this is the unmodified.
Yes.
So what's the middle red line?
It's the median line, dude.
The line also responsible. Is that support resistance?
It's up to you to determine what it is, given the information that you have. So in this situation here, it's acted as resistance here, 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 and here. So in this situation, it would be a resistance line. But it can change to be support if it does tend to retest in the future.
How would you know when to sell them?
Sorry?
How would you know when to sell?
You'd sell when it obviously hits it. This just acts as a resistance line. It follows the exact same theory as a resistance line. So when you want to move from a support to a resistance, I know, you're a prick.
I'm going to ask you every question on the
I know. So if we have a look at the lower quartile, what we've got is we've got a support line shifting to a resistance line. How do we know that? Well, a resistance line shifting to a support. As we can see here, it's tested a few times as a resistance line quite successfully. However, here in this section here, it does test to be a support before reverting back to a. Told you, sets of threes. So yeah, that's the shift. So every line here can be a support or resistance. It's up to you to identify which one based on the previous data. Does anyone else have any other questions about that?
What's the best time frame for trading?
Any. But 1 minute, you'll kind of get like... trading on the 1 minute is just stupid. You can use it on any. It doesn't have a restriction like some other tools. You actually can. You know what, Mohammed laughs about that, but I do have an example of here. I've been talking over the last few weeks of an analysis that I did on a NAB over 11 years of data, and I was able to identify a buy-in point, and I think my mate's up about 20% in 100 days. So for a stock that is such a major company as NAB, that's actually not too bad. So does anyone have any questions about the unmodified shift? No? Sensational.
More coming.
Modified shift. This is probably the most common one that you'll find. It does a 50% adjustment in price and in time. So what does that pretty much mean? It pretty much does what the unmodified shift does, but just takes it one more step. Allows for an even greater angle and allows you to find trends that you might not be able to see with the previous two ones used. So yeah, we'll go into some Okay, so this here is three examples on the same asset, on the same time frame, pretty much on the same everything. Can anyone tell me what this one might be? Standard, very good. Can anyone tell me what this one would be? Unmodified, and the top one is the modified. Can anyone tell me which one would be the most appropriate in this situation? In this situation, which one would be the most appropriate? Absolutely.
Yes.
Can anyone tell me why this one wouldn't be?
Shit.
More or less, yes. So yeah, straight away, you should be able to tell that it's absolutely ridiculous. It doesn't encompass any data whatsoever. If you were to go the modified shift, which is the top one, you could potentially get away with it. However, it doesn't encompass as much data as the unmodified shift does, which is the middle one. So it's just up to you to find which one works best for you in the given situation. Yeah.
Can you draw all three in a certain circumstance and then decide which one's best?
100%, yeah. There's nothing stopping you from trialing and error. That's exactly what I did here. Well, initially I knew that this one wouldn't be it. And I knew that it would either be modified or unmodified, and it was pretty obvious that it would have to be one of the two. And then it's just about plotting them both and deciding which one encompasses the most information, which one has the most touches of support and resistance, and then just doing your analysis from there.
How come you didn't use the previous?
Sorry?
How come you didn't use the?
Why didn't I use that one? This one?
Oh yeah, not playing.
You absolutely could have, but... Sorry? Well, see, the reason I didn't do that was it didn't encompass enough information. So yeah, every position, there are a few A, B, there are a few B positions there. It's just about plotting it and trialing which position actually gives you the best information. So yeah, 100%. This could have been the B position. However, when I did do it, it just didn't encompass enough information. This one could have been in it as well, absolutely. But again, I just didn't like it. This one could have been the C position. Again, I just didn't like it. So it was just about trialing and figuring out where the best position was for me that would give me the most information that I wanted to see. But in saying that, absolutely don't force a shift or a pitchfork to happen. You need to be able to justify why it's happening. So if you have one that's pretty much horizontal, you might want to avoid that. If you have one that's, I guess, pretty much vertical, I don't know how you get that. If you have one that's extremely thin, reconsider your positions. So you do want them to cover a broad spectrum of pricing. If it's too thin, you're pretty much just wasting your time and you just got on a useless tool. Okay, so I do want to give an example of an incorrect pitchfork. This is a poor example. Can anyone tell me why?
Price just broke straight out.
Nope, nothing to do with the price. It's actually to do with the setup. Yes? Bang on. So you've gone from high to low. That's ridiculous. You need to go from high, or low, high, low. You can't be going double, because then you're just going to get something stupid like this. Although you might go, oh, but Jacob, it tested well. Maybe once there. Fantastic, you've just missed out on all of this. You might go, ooh, yes, it tested there as well. I'm going to enter into a short there. That's fantastic. Why don't you go donate to St. Vinny's? It might go to help someone, you know. That's just retarded. So yeah, if it looks funny, if it looks wrong, if it looks like that, you've done it wrong. Just, follow the pattern, the ABC pattern, high, and low, high, low. Chad?
Is there a lot of pips to be made though in those small gaps?
Absolutely. It depends on the time frame that you're doing it. If we go up maybe to a high one, let's say this example here. If you had realised that potentially this was a buy opportunity, there would have been quite a lot going from there to say there, or from shorting from there to there, or even if you wanted to from there down to there. So yeah, you can make a lot of pips, but you can also use it as a scalping technique. It also goes back to what time frame you're using it on. If you're using it on, say, the daily, then your pips are going to be quite larger than if you were using it on, say, the hourly or 30 minutes. Does anyone else have any other questions?
What about stop loss placement on a pitchfork?
Stop losses are pretty much just placed in your traditional way. A pitchfork won't help you place a stop loss or a take profit. Kind of, possibly. Exactly, but stop loss, no, not so much.
Wait, why not? Like, all this is designed to predict the price.
Yep, absolutely.
You should be able to narrow down where the price will go.
Well, yeah, you should be able to narrow it down, but there's nothing stopping it from going where you don't want it to. You can kind of predict based on previous movements where it will go. So let's take, for example, this situation here. We know that this here is a stop. We know that this is a resistance. We know that this is a support. If you were entering to a cell, you don't have any data above here. So there's nothing stopping it from hitting this line and shooting up. Whereas you know that this here has been a support tested there, and well, obviously at your origin point. So you could put your take profit here, but your resistance, sorry, not your resistance line, your stop loss is kind of ambiguous when you try to place it on Pitchfork. If you say potentially down here, looking as this as a buy entry, you could potentially look to identify your stop loss a bit clearer. But again, it generally won't help you with identifying a stop loss. It'll help you more with identifying a take profit. Anyone have any questions? Good stuff. Okay. Now this is the long-term example that I wanted to show. Over 11 years, it was 13.5% over 100 days. So you should be able to tell which Pitchfork that is. Does anyone have an idea? Unmodified shift. Thank you very much. Did you just guess that? Oh, it is. It is. Very good. So what I was able to do was my mate said to me, I think, and this is on the weekly actually, just to let you know. That's why I'm able to do it over 11 years. Yeah, I told him to get into it. I'm into it. I'm in it as well. So what I was able to do was I was able to see, okay, we got support there. Looks like a region there. For me, 3 touches is kind of enough. I said, mate, put some money into NAB. Put some money in there. He's up there. My take profit's closer to here. Reason for that? That's the last kind of region of resistance. What are you doing? You just see my cheese ball? I licked all of them, you know.
I had this dude.
Okay, anyway. So yeah, this is how the Pitchfork can be used quite successfully.
I don't eat bacon, dude.
Oh, that's right, you don't. Does anyone have any questions about that one? Is anyone a bit surprised that technical analysis works on stocks? Yeah?
How powerful would you say it's for?
It's up to you, man. You can give a doctor a scalpel and he can save lives. You can give a scalpel to me and I'll kill people with it. So like the tool is only as powerful as, I guess, the experience with the user. So it's not something you get straight away. It takes time with everything that we teach. Practice it, and you'll eventually just you'll get really good at it. But again, it's all about setting up and seeing what your preferences are. Yep.
Say like this 100-day NAB thing,
Mm-hmm.
and your stop losses do give a bit more space because 100 days is long and there's a lot of fundamentals.
Yeah, 100%. Yeah. So stocks is a completely different section to what we teach in this course, and I don't really want to go too much into that. But I just wanted to show an example of how even long-term analysis can be quite successful with a Pitchfork. Everyone all good? Beautiful. So this here is a bit more of a complex example. It's where you have 2, and you can have even more Pitchforks. So what I've done here, can anyone tell me what this first big one is? Also, this is on the CFD Silver. Reason why I wanted to do it as silver, I wanted to show that it can work on a variety of assets. Can anyone tell me what that big one is? Sorry? Correct, thank you. Can anyone tell me what this one is? Absolutely. So what I've done is I've just placed a modified chiffon with the ABC. You can see where it's tested quite successfully. And I'm a bit concerned about this area here. Let's say I'm trading here and I want to identify what the next one's going to be. What I can see here is I can see A, B, C quite clearly. I've got a potential support area here, as it's been tested there, potentially there, and there. But I want to be sure. So I place, yep.
I have to see at the lower.
At the lower one? Just the one that was there was actually suited better. It just suited better. Like, it's about finding your preferences and finding what works for you. You don't have to take the lowest. So it's just the way it works, dude. I don't know how to answer that, man. It's just it's just how it is, dude. Like, you gotta find what works for you. Because this position gave me the best angles. because it gave me regions of support there the most. Whereas if I went down here, it expands this. You're a spastic, you know. Sure. So what happens is if I was to drop this down here, what happens is it expands the quartiles and potentially might not show an area of support. The reason I've gone here is because that there is where it showed when I wanted to see the best. I didn't force it. It was actually still considerably a low point. I didn't want to go off the extreme. You know what, actually is the lowest, so fuck you. Looking at the candle. You, man. Good. So I was actually, so I didn't want to use the extreme. Because, you know, obviously it's an extreme value, it doesn't come along. I want to use real bodies, so where it closed, then that's what I've done. Real body, real body, real body. However, if going off that point, if I was to go there, it just pretty much expands the quartiles and might not give me what I want to see. Does that make sense? Okay. So what have I been able to do? I drew both here. It's hit support on my long-term one, and it's hit support on my short-term one. For me, long-term, short-term, both saying support. I'm pretty confident the support, I can hold that. Now, where would I get out? Well, there's several options. I can either get out at the top here, because it's been tested as support. I can get out at the top here, because it's been tested as resistance up here. Or I can get out at the top here, because it looks like, although it hasn't hit, it's come very close in the past. So it's just up to you as to how much risk you want to take on. If you want to be the safe, just wait, Mohammed. If I want to be safe, I could get out here. If I wanted to risk a bit more, here. If I wanted to be extremely risky, obviously up there. Why is that extremely risky? Because it actually doesn't have touches, it's just gotten close. Yes.
Honest question.
Go for it, please.
Let's go this year.
Go. Go.
Can you draw another pitch for upwards from...
What, from like, where, here?
No, so go to the left. You know where you first started the first video from there?
You want me to start here?
Like
What, from like, say, there?
Yeah.
Absolutely, but we don't know that exists yet. So if we were, say... Sorry?
I'm waiting for that one. No, I'm serious actually.
Well, for starters, the obvious reason is we don't know exists yet. But there would not be nothing stopping you from drawing one from there. It just would. You just have to pick which one you want to use.
Just to clarify something though, like what would actually make you know if it exists there or not? Like what are you looking for in particular?
That the asset has moved that far.
No.
Yeah, no, I know.
Like in terms of support resistance.
No, I'm saying that this data doesn't exist yet, because I'm just going off here. If you did have, say you were here, yeah, 100%, there'd be nothing stopping you. But I was going off where you would buy down here. This data doesn't exist yet. If it did exist, there'd be nothing stopping you from, if I was going to be, I think it would be just a standard one. You could go from there to there, and you could potentially get that entire section up there, and you'd be quite a successful trend. Because it would be...
Good explanation.
Okay, does anyone have...
Wait, would you recommend overlaying one pitchfork on top of another, like you have here, or would you rather just do multiple time frame analysis?
No, you can do that.
But which one would you prefer?
I prefer that.
Why not?
Well, no. I get. No. I get what you're saying. You're not being.
Like, would you get data close? Like, if you were to use a lower time frame?
Well, why wouldn't you just do this and then drop to a lower time frame?
Yeah, but that's what I'm asking. Like, would you prefer to multiple time frames?
Well, again, that's up to you. I did it like this because it summarizes all the information. I don't need to see useless points, especially because it is silver. If you go back and actually look at some of these candlesticks, they're quite long wicks with quite small real bodies. So I don't want to be seeing 1,000 dojis. I want summarized data, I want concise data. So that's why I've decided to go on I think this is the 20-minute time frame. Yeah, 20. Even looking at the 20-minute time frame, you can still see that there's quite a lot of movement. So you could potentially even just go to the hour and just go from there, but it's up to you. But there is nothing stopping you from drawing this and then dropping down to a smaller time frame. I would actually recommend that when you're going to seek out an entry position. So you would plot this, drop down to a lower time frame to actually be accurately be able to enter into the trade, say at the 5-minute or.
Would you say it makes a difference?
Absolutely, yeah. Dropping down to a lower time frame, 100% makes a difference. Because let's say, I don't know, we're looking at this candlestick here. You probably can't see it too well. Actually, I'll see if I can scroll up and find a better one. Maybe this one. Not really. But let's say we're looking here and we're interested in entering into a short position. If we were up here and the hour, this is the day actually. So if we're on the day, the movements are going to be very small on the actual graph. If you're able to drop down to the 5 minutes, you can see where exactly drops are occurring. So you can kind of get into a short as the data is actually dropping in almost real time, you know? Whereas if you're looking on the day, it'll still say that it might be either stagnant at the same point or continuing to rise as the overall trend of that candlestick is rising. If you drop down to the 5 minute, you'll be able to accurately see where drops are occurring, and then you can more accurately place your entry point. Although you might say, well, Jacob, what's 10, 15, 20 pips to me? Depending on your entry size, it can be quite a lot. You know, if you've got an entry size of say, 50, and you've just lost 5 pips as soon as you enter into a position, I'd rather not. But that's up to you. Does that answer your question?
Completely, yeah, thanks.
Good stuff. Okay, so the next one we're going to go for is the inside pitchfork. It is the most aggressive adjustment. I prefer to use these on downward trends. Downward trends. Price going down. Yeah, I just shut up. So the reason I like to use them on downtrends more than anything is just because they usually do provide a very nice angle. The adjustment that they have is similar to that of the modified and unmodified shift. As you can see, they do have some degree of adjustment. It does follow the exact same pattern, A, B, C, follows the exact same theory. The only difference is it just provides a more aggressive form of adjustment. That's really the only difference.
So it's a higher degree of adjustment.
Exactly. So there, you have four pitchforks. We want to use a variety of them to be able to identify our trend. We want to use a variety of them to be able to identify which angle we want to take. And I guess it helps us identify which trend or slope we should be interested in. In this situation, I chose to use the inside pitchfork because I noticed that the trend was, it wasn't quite aggressive. However, just the inside pitchfork did encompass more data than any of the other ones. Whereas if I was to use, say, the unmodified, you'd be getting down here. If I was to use the modified, you'd potentially be getting something out here. The modified would be around there. The inside pitchfork really does provide a more aggressive angle than that of the latter three.
So you've been doing this for a while, so...
Take 5 minutes.
Like by eyeballing, you know which pitchfork to use.
Well, I roughly know because I've been using this for quite a while.
Yeah, that's what I'm saying.
Yeah.
What I'm asking is, like for us beginners, do we just overlay pitchfork after pitchfork on top of each other?
No. Put one on, grab an idea, piece of paper on the side, write some notes. It'll take you about 5 minutes just to plot them all. It's not a hard thing. It's not like you're actually calculating something. You're essentially using the exact same points over and over again, just with different ones.
How do you know which one to use? Like,
whichever one encompasses the most data. Like, that is the simplest way to put it. Ahmed. Why? What's the rush? Settle. Bro, we got plenty of time, don't worry. Okay. Pitchfork fan. Actually works in, again, it's not surprising, the exact same way, A, B, C. This one, however, does not provide any adjustment. A, B, C. Unlike the pitchfork, it's pretty explanatory what it actually is. The pitchfork takes its name from looking like a farmer's pitchfork. This one's a fan, pretty straightforward. It's not difficult, it's not rocket science. But again, it just provides a greater, this one just provides a spread of potential angles that you might be interested in. The theory is exactly the same. You're looking for points of validation, you're looking for points of support resistance. Why would we want to use one of these? Generally, it kind of almost overcomes the issues that you'll see with a lot of the other ones of looking for that specific angle. This one covers a much broader spectrum. What the issue is with that is when you start to get into these later out positions, you have to wait much longer before you get another touch. So you'll get quite a lot in here, but when you're out, In the broader spectrum, because obviously it's expanding, you have to wait a lot longer before you get a key touch.
Wait, a lot of people say you should skip the first 5 to 10 candles when using the fan or things like that.
Yeah, 100%. Yeah.
Would you like, okay.
Yeah, 100%. But just because it's too sensitive. Like even if you just look in this situation, yeah, okay, you got heaps of touches, but that's just because the fan's so small. You know.
That's okay, next one. I just had to make that comment, man.
Up to fucking here, Mohammed. Up to fucking here. So yeah, does anyone have any questions about pitchforks, fans, or anything Mohammed and I have spoken about today?
Does anyone have any questions? Just be careful asking him, he'll swear at you. Do you have any questions at all for anything?
Is everyone good? All right.
So we'll take a break. Jay?
Yeah, we'll take a 5-minute and then we're going to come back. Huh?
That's why.
So we're cutting it now because.
Alright, so now we're going to cut the recording. And after this, we're going to teach you 2 of this 2. Yeah.
Yeah, 2.
So 1 strategy each. Now I'm going to tell you something.